I'm going to be starting from the basics, how to actually know where to buy. I'm sure most of us are traders, right? You have access to Binance, KuCoin, and the like, right? So all of us have access to trading, right? You know how to trade and the likes. I mean, you have access to trading platform like Binance, KuCoin, and the like. So you should actually be able to get yourself familiarized with what you're seeing. These are charts. Last week I talked about the candlesticks. I talked about candlestick. I talked about the chart tooling and the likes. Oh, these are my Bitcoin analysis. So this is my projection for Bitcoin, the major entry for Bitcoin. Anyway, we're going to talk about analysis later. But right now, it's a newbie class. We're going to talk about how to know where to buy. And basically, even if it's either you're a long-term trader, you are hodler, like that is you want to order for a long term, or you're a trader. There are different ways to actually know. There are different tools you can use to actually know where to buy, either for long term or short term. Like I said last week, if you're going to be trading, the first thing you need to know is the time frame. How long do you want to order? And how long do you want to trade for? How long do you want to be in this trade for? That's the first question you must answer. Once you're able to answer that question, then that question brings you to what's the time frame. That's where you see the time frame. You have 1 second. So I won't advise you to do 1 second. That is gambling. 5 seconds, too slow. Anything seconds, I won't advise you to actually trade on the seconds. That's gambling. We have 1 minute. 1 minute is still gambling for me. 3 minutes is gambling. 5 minutes is still gambling for me. I don't use 5 minutes. 15 minutes, some people do it, but I categorize it as gambling. 30 minutes, yeah, you can still do 30 minutes, possibly, or 45 minutes, thereabout. It's still gambling for me. I don't do any. Now, the best way, my own strategy, like that's basically what the class is about. I'm sharing my own strategy, right? Sorry, I do long-term analysis for short-term trade. Like I'm going to be trading a platform, trading on the portal for, let's say for a week. I do analysis on daily, and within that week, I can scalp my profits within that week, and the sentiment can also change. Also, sentiment can change within the listing. So these are things you need to look out for. That there's nothing is fixed, nothing is constant. That the market is looking bullish right now doesn't mean it's not going to flip bearish in the next minute. That is looking bearish right now doesn't mean it's not going to flip bullish. Please, can you hear me clearly? So, the first thing you want to know is the time frame, like I said. So, right now I am currently on Bitcoin daily time frame. If you look at what is there, you have 1 hour. I use in chat 1 hour, 4 hours. These are the hours. These are actually the hours I use in trading. 1 hour, 4 hours, daily, weekly, and monthly. These are what I use. Depends on how long. If I'm trading short term, 1 hour, 4 hours. If I'm trading mid term, probably within a day, daily and weekly. If I'm trading long term, monthly, I just go to weekly and monthly. That's what I use for long term analysis. Okay. So those are the first questions you need to answer. The first thing is how long, time frame. Once you know the time frame, then you come to your entry. You come to the chart. Now, like I said, there are different indicators you can use. One is using looking at the chart and identifying support and resistance. What I said, I posted something in the group. I said you buy support, you sell resistance, right? You buy support, you sell resistance. That is the way it works. You buy support, sell resistance, buy support, sell resistance. That is the way to make profit, especially in spot trading. The same thing in futures trading, you can buy support, sell resistance, or sell support, buy resistance, depending if you are longing or shorting. So it depends on the direction you are going to. If you're longing, you buy support, you sell resistance. If you're shorting, you buy resistance, you short. You buy resistance, you sell support. That's where it goes. So, and one of the major things is for you to identify support and resistance. Identify support and resistance. So how do I know my support? Like I said, we have either horizontal support or there's something we call higher high or higher low. When we say higher high, means that the last support is higher than the higher means the last support is higher than the previous support, or the last that is it. Last support. This is higher high. This is the first support. This is second support. So this support is higher than this one. That's why I call higher high. This one is higher than this one. That is on the price range. Because this is I will call it higher high. And there's something we call there's lower low, and that's when it's actually coming downward, like something like this. We have this resistance lower than this is lower than this is lower than this. That's lower low. Okay, so those are resistance points. And for you to actually be able to identify your resistance, it is best for you to use the trend line tools. That is what we have here on the left hand side. We have trend lines. You can either use trend line or you can use horizontal line or horizontal ray. These actually these lines, this green line and the blue lines you see are horizontal rays. So if what you're seeing on the chart is okay, this thing is actually showing, you can see all the trend line I've drawn. This thing is actually showing direction. I mean, what's called slopey direction. Then you can use trend lines. But if you're seeing the support line to be horizontal, then you can actually use the horizontal line. That you can get from here. Just click on this pull out arrow. You can see the drop down, horizontal line and the likes. Okay. So how do you identify support? So how do we identify support? You can see we have this green line is actually a major support for Bitcoin. This green line is actually a major support for Bitcoin. And I was able to identify it by what? Looking at all the supports. Like when the market dumped, when Bitcoin went up, it got to around 34,700, dumped back to this region, this green region. This is the first one. That's why I have this arrow here. This is the first one. It went up again to 41,000, dropped back to this region. This is the second one. And went up again, jumped back to this region. This is the third one. And this one almost hits. This is actually why it is within a range. Within 30 and 28 is a major support range to be within a range. So this is the range.
But I have a question. Is about the green lines. You have the green horizontal lines.
These ones. Yeah.
Huh?
From here, like I said, you add it from here, from your trend line tools, you see horizontal line. This is it. Okay. That's what you get to add. If I click on it, I can add one here. This is it. Then you can increase the features, probably thickness or something. You can change the color, you can reduce or increase the thickness from here.
All right.
So that's it. So this, like I said, the support is not a fixed figure. It's not a fixed figure. Support is not always a fixed figure. It is a range, not a fixed figure. So if you're going to be placing your support, your entry, so right now, if you're looking at this support, we have the higher band of this support and the lower band. This is higher band, this is lower band. Lower band is around 28K. And that is where Bitcoin has been consolidating at. And the higher band is at 30K region. So that's the region right now. So like I said, we have the first target hit. This is the first time, second time, third time, fourth, fifth, sixth. And right now we've been dancing here. I can't even count the number of support hits we have. Okay, 6, 7, 8, 9, 10, 11. It's actually holding. If you look at this doji that formed here, it's held above this support line. So it's actually within the support line. So we actually stay within the range. If you see Bitcoin right now, Bitcoin is actually consolidating within this range, this major range. I think it can get up to 35. Yeah, Bitcoin is actually consolidating within this range right now. And this is your support. Now, you should know that support can be broken. If you remember, what we're talking about today is how to buy and how to sell. The best way to buy and best way to sell. How to know where to buy. So currently we're talking about support. I said for spot tradings and even futures, you buy support, you sell resistance. Now, because I'm trading on higher time frame, that is why my support is actually this big. If I'm trading on lower time frame, I'm going to be using lower time frame, which is let's say 1 hour. You can see what happened here. This is support. This is like the major resistance. Let me put down this blue line. This is it. This support. You can see this one is the support. You buy here, you sell here. You dump again, you buy here, you sell here. You buy here, you sell here. Buy here, sell here, buy here, sell. It's actually concerning. You can see what I'm trying to talk about, right? Like on the 1 hour is actually more glaring. Like it's actually consolidating within this region, like that. And it has been hitting this major support. You can see it has hit it one, hit it here, hit it here. I think this is it here. So this is actually how you identify your support. You identify your support by the price range or region in which, now if I'm trading on short time frame, I can trade with this. If I'm trading a higher time frame, that means I have to wait a longer time frame for a longer time to take profits. So how do you identify support? You identify support by looking at the trend line price. The trend line price in which the price is actually not going below. Like the price right currently is actually not going below this trend line price here. And it has been consolidating since how many days ago? Sorry. I'm actually on the logarithmic chart right now. That is why it's kind of difficult. That's why it's kind of difficult to adjust. So you can actually tweak your chart. If I want to make it remove, I can easily drag it to any extent, drag it up and drag it up or low. You can easily drag it up and down by disabling your auto or disabling log. The logarithmic chart is actually going to compress everything in a logarithmic. Sorry, don't mind my slip of tongue. In the logarithmic format. Okay. So once you identify your support by where the prices are actually doing, that is actually manual. This is using the manual tool. I'm going to show you other ways to actually identify support. Using manually, you can actually look at the chart and say, okay, this is the support. You can see what I did here. I said, okay, there's a potential support here because Bitcoin eats here, but this support is not strong because it only eats it once. But this support is stronger where Bitcoin is actually going right now is stronger because we've been having Bitcoin. It has been holding since January 2001. Sorry, January 2021, Jerry. It has been holding since then. We've been having that support 2021. And that is why it's actually still currently holding. You can see this one, it only eats it once. It is not strong. It eats it once here too, indicating not strong. Here, this region, if you look at here, this 40,000 was a good support and resistance too. And you can see Bitcoin holding. I think it held it for some time, but it didn't hold it strong enough. But here is actually a very, very strong chart. Now I'm going to go backward, still on support. I'm going to go back to what happened in 2020, 2017, 2018, 2019. If you look at the reason why I said we are still going down is basically one of these issues. You can look at what happened in 2017 and 2018. This is 2018. Look at what happened after the major bear drop. Bitcoin consolidated it started consolidating from March 2018 to November 2018. Can you see what I'm saying? From around March to November 2018, started going up and down, consolidating to November 2018 before the major capitulative drop that now dropped Bitcoin to around 30,000. So what we're having currently on Bitcoin right now, what we're having at 30K, 29K region is what is currently what we're experiencing right now here. What we experienced in 2018 is what we are currently experiencing in 2020 right now. And that's why I'm saying it's going to be a very, very boring ride for us for Bitcoin before we actually have a capitulative dump. Bitcoin is still coming back to this region. This region is still going to hit this region before we actually hold. This is actually the worst case scenario, I think. It's still come back to this region before we actually can say we're going back up. So that is how to identify. And why did that? Before I show you other tools, how did I identify this region? Look at what happened in 2020. You can see there's a support here. By just looking at the chart, if you look at the chart from afar, you see that we have some region that are thicker, like the Bitcoin was actually not going, or it wasn't going up or down. Those are regions of support and resistance, right? So that is actually how to determine your support. And if you draw the Bitcoin line, let me draw the support line. So support is determined by looking at the consolidating prices. So the price is actually consolidating around there. This actually gives you support. You can be able to buy support here, sell, buy support, sell, buy support. When you buy support here, don't be greedy when it eats your resistance. The next thing is for you to sell. Like what happened here, you bought support here and it eats your resistance and it's still going above it, and you feel like it has broken up. It can actually be a fake out, right? Your resistance got broken and it's still going up, and you want to jump in, and you FOMO, then markets start coming down. You'll be trapped. Example 1 on how to identify support. The other tools you can actually use, the other indicators you can use to identify support. So you can come to indicator either on Binance or whatever tool you're using. I'm actually using TradingView to make it easy because TradingView has more indicators, right? You can come to indicators, come to Bollinger, just type Bollinger. You see Bollinger Band. I'm actually, the one I want to use is the band. If you click on Bollinger Band, it's going to show you Bollinger Band. You can see this is the band. We have the upper band, lower band, and the middle band. You have the upper band is blue. You can edit it and change it. You can edit the color and say your upper band, you want to make your upper band red, and your lower band, you want to make it green. Maybe your middle band, you want to make it yellow. Okay, so change. And you can change the thickness whichever way you want it by going to settings and doing that. Or probably just double clicking on it. So double click on it, then it's going to come up. Okay, so this is it, Bollinger Band. So I'm changing my own color to upper band is red, lower band is green, middle band is yellow. So how do you identify support and resistance with Bollinger Band? Now, let me state this. It is best to use Bollinger Band when the market is consolidating, right? It is best to use Bollinger Band when the market is consolidating. The market is not consolidating. Sometimes you can go to Bollinger Band will not show you when the market is going to go to extreme. It is only best when the market is consolidating. But when the market is going to extreme, like what happened here right now, you can see the market is actually still going down, and it's still eating the bands. It's still eating the band till it's still going down. That is one of the challenges with Bollinger Band. It doesn't tell you when the market is going to extreme. It only tell you when that's hit the band, which is like take profits. So how do you use Bollinger Band? Let me show you on what we have recently, what we currently have on this year's chart on Bitcoin, right? After this dump, we have the extreme. Let's say you had extreme, you bought extreme here. Whenever the candlestick hits or crosses above this line, this band, the upper band, that is your resistance. It's telling you take profits. Whenever it hits this band, it's telling you take profits. I'm talking about the red line. That's your resistance. That's target. And whenever it hits this green line, that is your support. That is it. You can enter. I'm talking about if you're doing spot trading right now. So whenever I hit this line, this green line, it's telling you can hit your support. You can enter. That is the market is going. Whenever the market is going to reverse. Now the extent to which it's going to reverse is not going to tell you. That cannot tell you. But it's going to tell you it's going to reverse. But it might not tell you. It can tell you it can reverse within the next candle, but it can still keep going up. So like I said, it's only when you have ranging, like when you have the market that is consolidated markets, then you can use Bollinger Band. Bollinger Band is actually very, very useful here. You can see whenever it touches, if you look at what happened, when it touched it here, it's telling you, now this is now where the use of candlestick is very important. Like I told you that candlesticks, that all these candles actually have different names. And each of the candlestick pattern indicates the direction of the market. Each of these ones. Whenever you have a doji at the top of, what we had here is like a double top on a short time frame, right? On a short time frame, we had a double top. That is, this was the first top, jumped. This was inverted armor. I can call it a doji actually, or is at the top of a trend. The next class is going to be about candlestick. We're going to do analysis about how to understand candlestick and use candlestick for trading. So for me now as a pro trader, I can say it has hit this red line and it's telling me the market is going to reverse. And when it starts reversing, and because of this candlestick, this green one, I can easily say the market is going to reverse. That is the confirmation. So the market actually reversed, but the market did not touch this yellow line before going back up again, and now did a double top. What I mean by double top is this. You can see what the last price here for green is almost the last price for red here. This candle on the 22nd. So this is actually a double top, a potential double top, and right now the market is reversing after it. If double top means market reversal. Whenever you see double top, it's telling you the market is going to reverse downward. Whenever I see double bottom, it's telling you there's going to be a movement upward. That's just it. Okay? So it's telling me the market is reversing and actually start reversing. Now, the market can actually it might not break this yellow line. Whenever the market breaks this yellow line downward, is an indication that the market is going down. That is, it's going to come and hit the green line. That is it. Whenever it breaks it upward, it's telling you the market is going to go and hit the red line. That's it. Like I said, Bollinger Band is good, but it is not enough Like I said, it is not enough to predict, but it is good to predict, but it is not enough. That's why it's best for you to actually match other indicators, like the one I did initially. I can tell, okay, just looking at my trend lines, I can usually say this is a support, this is resistance, and I can buy at support and buy at resistance. And I can use my stop loss. So we're talking about how to enter and how to sell, when to buy, when to sell. Entry, that's what we've been talking about. So we talked about looking at it manually. That is how we're able to identify the support and entry point. The next one we're talking about right now is how to use Bollinger Band. Bollinger Band is actually tells you whenever it hits the red line. This is not the default color. I'm the one I changed the color to red, yellow, and please mute yourself. Red, yellow, and green. So whenever it hits the red, it's telling you extreme. That is, short it or take your profits. Whenever it's in the green, it's telling you can enter. That is in a ranging market. That is a consolidating market. That is when it's best. Bollinger Band is not best to actually predict. Like you can see here, the market actually reached extreme. You see it's in extreme, and Bollinger is it's in the green. And if you keep entering because you're thinking it's Bollinger Band, you keep buying. You think you bought the dip, but the dip will keep getting deeper. You buy the you get to deeper life. Stuff like that. So that's the way it goes. Okay. So using Bollinger Band, that's actually how it works. But it is, like I said, it's only best to use it in a ranging consolidating market. Market that are not consolidating, don't bother using it. It won't pay you. Fibonacci retracement actually help you predict entries and exits. So I'm going to do. These are my predictions. If you watch my videos last year, you see why when I said, well, this is when the peak is going to be setting, where the market, a bear market is going to start from. That was what this one was for. Fibonacci is actually, you can get it from here. Fibonacci's. You have different, but that's using Fibonacci retracement. Now, if you want to predict downward, entry downward, you take it from the bottom. But Fibonacci trade from the bottom to the top. You want to predict retracement. That is, what's the price? Where are the regions that I could possibly enter if the price is dropping? That is, you predict downward. You take from bottom to top. But you want to predict upward. That is, you want to know where the market is going to get to if the market is going to break out. And you take it from top to bottom. That's it. So right now we're trying to predict support. That is where to enter when the market is dropping. So I'm taking it from bottom to top. Bottom to top. So from bottom to top, you can see the Fibonacci retracement line. Like I said, a good technical analyst doesn't use one indicator, doesn't really use one indicator to predict entry and exit. These are actually free indicators you can see on any chart. And that's why I'm actually starting with them. There are other indicators that are going to be giving you more certainty than this. I want to make you understand. You need to understand what it means to know how to trade, basically. So we have Fibonacci's. You can see Fibonacci, the Fibonacci is actually putting my entry. Let me put it here. Let me put it to, okay, I'm predicting from here, right? Predicting from this support where I said Bitcoin might dump to at the end of the year. Close to the end of the year. I mean, the final bear market range. So from here, which is Bitcoin has at this support at 17,000 to the peak. That is the highest from the lowest price that you can decide the lowest price you want to predict at the time to the highest. Right now, so I'm going from here to here. So Bitcoin actually broke this. You know, this is actually how to identify some support or entry. We have this. This is actually too dangerous. You can see that's why the color is red. We have 0.2. We have the 0.2 regions. We have the 0.3, 0.382. We have the 0.5. 0.5 is mildly okay, but we have the 0.6, we have the 0.7, this is it, and we have the 1, this Fibonacci at the 1, right? So at 0. The current support is actually showing Bitcoin at what? You can see the support right now. Support line is actually showing at 0.7. You can see it here. It's actually correct. If using the Fibonacci, I could actually be able to determine that this is a support at 0.7, and the worst case scenario is actually here at 1. So using Fibonacci, you can easily decide to enter if it's for a short term or a long term, depending on, you can see, using Fibonacci right now, you can see where, let me take it to beginning of here. 2020. Yeah, beginning of the bull market, yeah. Is it? Beginning of the bull market. This is from beginning of the bull market to the peak. Look at what the Fibonacci is actually currently telling me. Telling me this is a potential support, but it is not valid. The best, the green, which is actually still mild, is around here. That's 0.6. That's where we see us. So if you compare what the analysis I've done with the first analysis, manual identification of support and resistance, if you do it, if you use it and compare it to Fibonacci, they will almost give you the same thing. Bitcoin's currently ranges around the 0.6 region, which is here. And it's telling me that the last dip for Bitcoin, the next dip, which is the next support, is actually around this region, 0.7, 0.778. I can see it's actually within the region I said Bitcoin is actually going to dip to, that the final support that we actually get to experience. And you can say, you can use that, like I said, you can use Fibonacci to actually predict your support or where you can actually be able to decide your entry. So that is that about Fibonacci. Do you have any? Okay, I'm going to take a question after the class. Moving averages. How to use moving averages or exponential, either exponential moving average or moving average. I currently have some moving average enabled here. So how do you get moving average on Binance? You come to technical indicator. Currently, I have 3 moving averages enabled. I have moving average 1, which is 8 moving average. Moving average 2 is 50 moving average. Moving average 3 is 20 moving average. 200 moving average. I'm going to enable moving average 4, which is I'm going to have a 34. And this one could be. I don't think I need. I don't need it. Let me switch the color to white. Okay, so we have this one. Let me edit it actually. I think some colors are not too glaring. It is glaring, right? 50 is open to. You can increase its thickness, like I said. You can easily increase the thickness of your moving averages by coming to settings, so you can see it clearly, more clearly. Okay, so we have 8 moving average. We have 34 moving average. We have 50 moving average. We have 200 moving averages. Now, all these moving averages, they work in different time frame. Okay, they're for daily time frame. If you are trading on daily, like I said when we started, the first thing you want to look at is how long you want to trade for, right? I think I wrote it here just so that I don't forget. So for moving averages, we have moving averages for monthly, we have moving averages for daily, we have for weekly. So for daily, the best moving average to use for daily is 50, and that's for long-term charts. Anyway, note it, long-term quotes in quotes. We have 50 and 200 daily exponential moving averages. For weekly, we use 17, we use 21, we use 43 moving averages for weekly. And on monthly, we use 6, we use 10 for moving averages. Okay, please note them down. Exponential moving averages we use for daily, we use 10, we use for long term, for daily long term analysis. Note, long term. Don't forget what I said, long term, not hourly trade, not something you trade within a few days. Long term. If we use 50 moving averages and 200 moving averages, and whenever you see the 50 moving averages cross below, like, okay, I'm going to hide the rest. I'm going to only use, let me hide this therefore. Okay, whenever this is 50, this magenta line is 50 moving averages, this is 200 moving averages. Whenever this crosses, whenever you see this cross, whenever this 50 moving average cross below the 200 moving average, that's what we call dead cross above it. And see, when it crossed here, the market went up, even came down below, but still break back upward. It's an indication that the market is actually going up. And that's when we add our all-time high. Okay, so this is dead cross. Now, how do you determine when to enter true moving averages or exponential moving averages? How do you determine your entry? Now, if you're trading on the daily, Like I said I do long-term analysis but take profit in short term. How do I do my long term? You just using this alone, you can be able to predict where to enter, when to exit. How? Whenever you using 8 moving average, this is 8. This is this gold line, this gold one that is very close to the candlestick is what we call 8 moving averages. Okay, and it also tells you where you can enter and where you can exit. Whenever your candlestick crosses above the 8 moving averages, like what we had here, whenever I cross above it and close, there's crossing and closing. Okay, there's crossing and closing. Whenever it crosses and closes above the 8 moving average, which is this, let me hide the rest. Now, there's something we call confirmation. That is, like I said, technical analysis and whatever analysis you're doing is not, there's no certainty in trading, there's no certainty in technical analysis. You only have probabilities. Okay? Now, whenever I see any candle closes above the 8 moving average, it's telling you an indication that there's a potential uptrend. The probability of the market going upward is higher. That's just the implication. Probability of the market going upward is higher. And now this just the next candle we see here confirms that, because the next candle actually closes above the 8 moving average as well. So when the first candle closes, like if you look at what happened here, we have the first candle, this red candle, we close this. Okay, let's start from this green. This green candle, the next one closes almost above, and the next one, now when this one closes below, it's telling you that it's still downward. Now this closes above. Now you're not supposed. Once you see the first candle that closes above it, the first thing you want to do is wait. Don't enter. You want to wait for. No, it actually did not close above. It closed below. It closed below. Sorry, it closed below. It actually closed below, and the next candle closed below. Now when this one closed below, it's telling you it's going down. Now this one is actually not this is not using support and resistance. This is actually using getting indication to know if the market is going uptrend or downtrend, and can also help you to know where to buy. So you only buy at the cross. Whenever you see a cross, when it crosses above it, buy it. Okay, when it crosses above this thing and closes above it, it's telling potential uptrend. So I buy. Now, like I say, it can be very risky with trading too, especially if you're using it on short time frame. So if I buy it, I bought above here, and if I bought above here, I've been in profit, and I'm still holding it, and that could put me in profit of about. Let me chart it. The same thing happened here. You can see when it closed above it, we have now, like I said, this is one. This first candle. If you're going to be using moving average, you should understand how candlestick works. You understand the meaning of candlesticks. We have this green line, this green one, this green candle on the daily is what we call bullish engulfing. And what do you mean by bullish engulfing? It's engulfed, that is, it went higher than the previous candle. It engulfed this candle and it closes above the 8 moving average. That is an indication that the price is going to go up. So if you bought here and you hold it, you're actually going to be in good profit till you close it. Okay, those are things you need to understand. You need to understand, as much as you're going to be using moving average for entries and exits, you must understand how candlestick work, because it is actually the movement of the candlestick that determines what you're going to gain. So the candlestick is bullish. Let's say we'll have the bullish engulfing, or we have a doji formation. And the next candle that was formed after a doji formation, this is a doji. The next candle that's formed after a doji is bullish engulfing. That's telling you the prices actually might go up, like I said. There's no certainty, there's only probability. So as long as you understand that there's only probability, there's no certainty, then that will actually help you to place your trade well. Now, at the end of actually showing you this, I'm going to show you where to place out, because a lot of people have been placing stop loss in the wrong way. And that's why they most times get triggered. Frequently. It's not like that sometimes your stop loss actually get triggered. But most people don't really know how to place a stop loss. Then they get triggered so easily. So that is actually how to use moving averages, especially 8 moving averages. Now, I'm going to switch to enable 200 on the daily 200 moving average. That's the next one. On 200 daily move is actually very, very, both in futures, in stocks, in forex or whatever. 200 daily moving average is actually one of the very most important moving averages that is used in trading. That's what institutions actually use. So whenever you see the market ranging, whenever let's say the market drops and closes above a 200 daily moving average, as long as it is above 200 daily moving average, it's telling you, you can see the bull market started in 2020 when the market closes above the 200. This is what the last bull market we just experienced. This is when it started, when the market closed above the 200 daily moving average. So once it closes above the 200 daily moving average, that's an indication that the market is going to go up long term, uptrend long term. And you can see it stayed there from March 2000 that's March 2020 till what's it called? May. Yeah, that was till May 2021. It was up and up and up, always going up. So for the long term, it's moving average on the daily is for short term. But for long term, let's say probably you missed the entry, you can actually use its moving average to determine where to enter again. But for long term, 200 daily moving average is actually a major support line, major support, right? Major support, like I said, for daily transaction, like daily time frame. We also use it on weekly and monthly. We use it on weekly and monthly, but on daily, 200 daily moving average is very, very important. So whenever the market comes to test, if you remember the last analysis I did here, that was early this year, when I said if Bitcoin actually breaks above this 200 daily moving average, then we are going up. But if you test it and reject it, it is downtrend. Bear market has triggered. If you remember the video I made, I think towards this region. Before I think that was in February. I made that video in February. That if Bitcoin actually breaks here and breaks above it, then we are going up. But if it doesn't break it, like what happened here, you can see what happened. Bitcoin actually touched it and rejected it. It rejected the 200 daily moving average. That's an indication of bear market. That is, we are going downtrend. Look at what happened here too. When Bitcoin broke it in February, in May 2021 last year, it wanted to break above it, but it did not. It got rejected. You can see. It broke below it, consolidated, wanted to break above it, but did not break above it. We had a doji then. We have a bearish engulfing candle. And that was actually what triggered the downtrend we had in May. And look at what happened again. When it broke above it again in August. Broke above it, went down below, broke above it. It wasn't sure. Broke above it here. If you look at from here, you can actually be able to take a short-term profit. And it was actually trading below. Then we had a bearish engulfing. Look at what happened. Then it came down, but later broke above the 200 daily moving average, which happened here. Broke here. There's another break here. So this is an indication that the market is going up. The same thing happened when Bitcoin, you can see Bitcoin actually broke it below it, but did not hold. Like I said, there's a difference between breaking and holding. When there's breaking, what happened here? It broke up below, but did not hold. It got reversed, rejected. That is what we have. This is what we call wick. Let me just define a candle. This is a candlestick. This is an example of a candlestick. This red candle. This is the body. This is the wick or shadow. We call it shadow or wick. This is the body. So you can see it broke the 200 daily moving average, but got rejected and formed a wick. That's why we are having this line on all the candlestick. So that is, this is not yet ready to break. But later on, this can actually start trending downward, and break below it, or above it, below it, above it. You can see it break below it, and once it broke above it again, with a bullish engulfing. You can see this is bullish engulfing candle. This is a doji, this is a bullish engulfing. That is bullish. You can see the market went up for some times. Then we have another doji, then we have a bearish engulfing. This is bearish. And the bearish engulfing finally closed below the 200 daily moving average. Like I said, you have to, whenever you're using moving average, you must understand candlestick. Bearish engulfing closes below the 200 daily movement. That is actually another indication of bearish movement. And you can see what happened. It started going downward. This is just technical analysis. Everything is on the chart. You can see it there. It's clear. And right now, you can see the rejection right now. This is the wick tested and rejected. And after rejecting, it started going downward. So those are actually ways. These are the three ways you can use a cross of 50 moving average above 200 daily moving average. You can use 8 moving average to analyze on the higher time frame. Let's say on the daily time frame, you can use 8 moving average to analyze where to enter and exit, where to enter a trade in the short term. Let's say within a day, and you can use 200 daily moving average to analyze where if the market is bullish or bearish. If you have to go uptrend, or if you have to buy it or short it, let's say long or short, if you're trading futures. Okay, so those are actually one of the major, the free open chart analysis you can actually get to do. There are a lot of indicators. I cannot go through all of them, but these are actually some of them you can actually get to use. Okay, that's Bollinger Band percentage B. Okay, I'm going to hide it. Why is it open double? Bollinger Band percentage B can also be used with Bollinger, but it works like RSIs. Are you there? Can you hear me? Hello?
Yeah, I can hear you.
Awesome. Okay. So Bollinger Band percentage B actually also work like RSIs, right? The way it works is it shows extremes of bullish extremes or bearish extremes. That is, if the market, whenever, for RSIs, we have upper band and lower band. Bollinger Band also have upper band and lower band. Okay, I'm going to talk about RSI too. But now, there's something you should note. You can actually merge RSI and Bollinger Band together. That's one of the best ways to use it. RSI. Using it together is actually good, right? So you can know your extreme and your extreme on the bullish side or extreme on the bearish side. So using Bollinger Band, whenever this line, that's the Bollinger line, crosses above the higher extreme, we have lower band, the higher band. This is the higher band. Higher band is at 1. Lower band is at 0. Whenever it crosses above the higher band, that is telling you the market is almost getting to extreme. Now, let's say whenever it crosses it, if it crosses it and RSI also crosses it, you can see RSI is actually getting to extreme, but it did not cross. But Bollinger Band crossed. Whenever Bollinger Band crossed, it's telling you there's always, there might be a later downtrend, but there's always a reversal. If you check our Bollinger Band ultra, you can see it crossed here to the extreme. This one actually was to extreme. It crossed to the extreme. Next thing we had a reversal uptrend. It crossed to the extreme. We had a reversal downtrend. Crossed the extreme here, reversal downtrend. Now it crossed to the extreme here. Like I said, it can actually cross to the extreme and keep going downward. It crossed to the extreme there. Now, if you want to trade on a short time frame, if you enter here, you'll have taken a profit here. Then there's a middle line just like RSI. The middle line actually indicates bullish or bearish. But if you look at what happened here, when it crossed the extreme here, it did not break this middle line. Whenever that's the 0.5 line. Whenever it breaks above 0.5 line, it's telling you it's bullish. But as long as it's below 0.5 line, it is bearish. It is still bearish. Look at so when it gets to the extreme here, reversed, but did not break the 0.5 line, it's telling you still bearish. Now we just have another extreme here. You look at what happened. We had an extreme here, and the markets are actually retraced backward, upward. Though it's still just small margin. But you can look at the reason why it hasn't broken above. Right, the market is yet. The reason I say we are not yet bullish. Look at the Bollinger Band percentage B. It is still trading below the 0.5. If you compare with RSI also is trading below 50 and is yet to. It did not hit extreme. You can see it hit extreme here, but as much as it hit extreme, it is trading in the bear zone. Okay, I'm going to zoom out what I'm saying. This is it: Bollinger Band, upper band, lower band, middle, extreme. The same thing for RSI. Upper band, lower band, this is 50. RSI 50. As long as the RSI line is below this 50 line, the market is bearish. As long as the RSI and the Bollinger Band is below the 0.5, the market is bearish. You can see what happened here. So right now, that's why one of the reasons I'm saying it's still bearish. It's still below the 0.5, but RSI 2 is still below 50. So it's currently bearish. And whatever I want to do on the short time frame. Now, for entry, like I said, if you want to know when to enter or where to take your profits, you can also look at the extremes. Whenever you get to extreme, you can enter, just buy this thing and wait for some few days. It's going to retrace back upward. Once you get to extreme, sell it, take profit. It's going to retrace downward. That is sure. It might not retrace downward fully, but it's also always going to retrace downward. You get the same thing here. If you look at, let me shrink it again. If you look at what happened here, extreme, you can see when Bitcoin got to the peak, it indicated extreme. When it indicated the extreme, you short it, you'll have been in massive profit. And by the time you got to extreme here, this is the second extreme. This is the first for entry one, your target one. This is it. Bounce upward. But if you look at what I'm saying, when it bounced, when it hit extreme here, it did not cross above 0.5. That's why we're still going downward. None of these actually crossed above 0.5, and that's why we're still going downward. It was after this jump in December, it crossed above, it got to the extreme bearish, then it traced back upward, but it did not cross below 0.5 until here. This was when it crossed below 0.5, and that's why we had a peak. We had a double top, like I said. Then almost at extreme, then we now back downward again. So what have I talked about today? I talked about how to use and analyze manually just by looking at the chart. You'll be able to determine support and resistance. By using Fibonacci retracement, you can actually be able to determine your resistance. By using Bollinger Band, you can determine your resistance, your entries and exits. By using moving averages, you can determine your entries and exits. And also by using Bollinger Band percentage B with RSI, combining both of them together. You can use that to determine your exit and exit either on the short time frame. I normally use it on 24 hours. Actually, it works best on 24 hours time frame. So it immediately for long time frame. 24 hours is actually the best I use it on. And if you see these extremes on monthly or weekly, once you see it on monthly, just forget it. Market is going to retrace. If you see it on monthly, you can see right now, market is bearish right now. It's actually trading below 0.5. This is on monthly chart, Bitcoin. And it's below that, is yet to get to extreme. This too is yet to get to extreme. So we're currently bearish, and we just entered bear mode. Like I said, we just entered bear mode in April, like full-fledged bear mode in April. I'm currently in bear zone. Once you cross above this 0.5, that's when we're going to enter bull zone. Now, those are actually ways to actually be able to identify your bull zone and bear zone. And probably you can also use it on short time frame, but the best place for me to use it is actually on 24-hour time frame. So that is it. That's about tonight. That's what I'm going to be talking about tonight. I hope you got value added. So you say you have any question, please drop your questions. About what we talked about so far. So we have a question. What's the best calculating period to use? 200, 150, or 20? Like I said, it depends. It depends on your time frame. Like I said, if you're trading on monthly time frame, the best to use is 6 and 10. That's for long. Now, are you trading for long term? Those are the things. Like the first question you must answer when you start trading is, how long are you in this? Do you want to be in this trade for? Are you going into this trade for long term or short term? If you're going into it for short term, then you know the time frame to use. If you're going into it for long term, you know the time frame to use. So for monthly, you use 6 and 10 exponential moving average. For weekly, you use 7, 21, and 43 moving averages. I only explained 8 and 200 today. I explained 8, 250 moving averages. These are the ones I've explained today, right? So those are the ones you can get to use to determine where to enter and when to exit. The best place to enter for moving averages. Okay, so it depends on if you're on daily time frame, you can use 50, 200. You can use 50 also, but basically 200 for long term. But if you want to enter on a daily time frame, you want to enter in a short time frame, then you can use 8 to enter. That's what I explained so far. Okay. Second question, and I am currently using EMA good. I use 20 and 50 period moving averages. Is the moving average better than the exponential moving average? Exponential moving average is just like using a logarithmic chart. So it's more or less more smoother than moving averages. That's what we have moving average, we have exponential moving average, we have simple moving averages. So they are more or less related. Only that some actually have more summary. Some are, I think, they are smooth. Simple moving average is like lower. Exponential moving average is more like an average between the moving average and simple moving average. So it's smoothing it out. So it depends on what you're using. I can start to use moving average or exponential moving average. All I know is the first question is you need to answer is long term or short term. Once you decide that, then that will determine the direction you're going. Okay. Like here, the best average use. I think I already talked about that. That's question 3. Best average to use depends on the time frame and depends on the time you want to be in a trade for. If you're trading on monthly 6 and 10, trading on weekly 17, 21, and 42, or some people also use 42. Some use 20. On daily, you use 50, 100, 200. Now, it now depends. Like I said, if you realize, if you check out how 200-day moving average worked, you can say at the beginning of the bull market started in 2020, when we have a bullish engulfing. Like I said, moving averages, when you're going to be using moving average, you must correlate moving average with candlesticks. Okay, they are very important. If you're using a moving average, you must actually correlate them with candlesticks. This was the beginning. That was in January, February, March, April. In April 2020 was the beginning of the bull market, of this last bull market we just experienced. April 2020 was the beginning, and this was it. We had a bullish engulfing here that crosses above the 200-day moving average. That was the beginning of the bull market. So, and if you entered here after crossing above it, then you will have been in good profits since then till now. And right now, when you cross below it, that's bearish. Cross above it, bullish. So that I'm saying. Now, if you cross above, if you probably missed buying the bull run, buying crossing above it, then you can now use the lower time frame, the 8 moving average or 9 moving average. Whenever the market crosses with bullish and going above the moving average, then you can decide to enter and buy your thing long term. So whenever you see a bullish engulfing crossing above a moving average, it's an indication of a bull trend. Or whenever you see a bearish engulfing crossing up below a moving average, it's an indication of a bearish signal. Now you have to, like I say, if you're using moving averages, you must understand candlesticks. Mixing both of them together, you are able to take your trade anytime. You don't even need anybody to give you any signal. You can be able to place your trade anytime you want.
Talking about trading now, do you think now is really a good time for trading, considering the markets? Because I've always projected that this year will be a bearish year, and I know people still make money, yes, in the bearish market. But do you think
Definitely
it's a good time to trade, especially for, let's say, beginners? And if it is, what is the best strategy to adopt to prevent you from having great loss?
Okay, good. That's actually a very, very good question, though. To determine if it is a good time to trade is one thing. Like I said, not trading is also part of trading. If you attend our last class, not trading is part of trading. So I would say, like I said last year, I think close to October last year, I said the only people that will be able to make money in this year are those that trade futures. People that don't trade futures might not be able to make money this year. That's what I said last year. And that's why we actually have been in bearish market. But in the bearish market, we still have people that can still make money if you understand where to enter and when to exit, not getting trapped. Okay? So for beginners, that's like that is one of the reasons why I'm actually having this class. That I'm actually starting from the cradle, breaking down all the trading strategies, what you need to know about trading. So for a beginner, you can actually start preparing for the next bull run by learning how to trade. Like I said in our last class, you don't need money to learn how to trade. You don't even need to put your money in. Like right now, I'm doing chart analysis. The best way to do it is, okay, I just see a bullish engulfing above, let's say I just see let's predict what's going to happen, right? Just say bullish engulfing above. Okay, this is too low. It's not here to bullish. This is not the right time to enter. Now, like I said, trading, you have to know the best time to enter, best time not to enter. Like this is a bullish engulfing. Like this is, like I said, when we are the bullish engulfing, you have to wait for the second candle before you enter. You can see this is a bullish engulfing. The next one to hit was what? A bearish engulfing. The side is the same. You say we have a bullish engulfing that engulfed, and we have a bearish engulfing. Like I said, that's why I say you should always be patient. When you have a bullish engulfing, wait for it to close. Wait for that candle to close. That is, you have to. If you're in Nigeria, you have to wait till around 1 a.m. in the morning. 1 a.m. in the morning for the candle to close. Once it closes, the new candle is going to open. The closure of the new candle will determine the direction of the market. Like what happened here, we have a bullish engulfing, or we have a bearish engulfing that closed below it. So once you understand when to enter, you understand how to use the tools. Even as a beginner or an hodler, this long-term analysis is good for people that want to hodl. Like those that want to. Somebody actually told me he wanted to buy Bitcoin. That was in March. I said, like, chill. There's a signal I'm waiting for. If Bitcoin crosses around 48K, then we are bullish. But if it doesn't cross it, we are bearish. So chill. So when Bitcoin is not crossed the 200 daily moving average, I just tell like this is not the best time for you to order for a long time. Market is still going to come down. And right now it's chill, and right now you can actually get to buy. And for my first entry, I can say I'm entering at 30K, and second entry I'm entering at 21K, something like that. So it all depends on the education you have. That will determine if it is the best time for you to trade or not. Anytime is the best time to trade, and anytime is not the best time to trade. It all depends on the education you have. And that's why we're actually sharing this kind of education right now.
Yeah, good evening, Crypto Smart. I'm happy that. Okay, thank you very much. Good evening, folks, and thank you, Crypto Smart, for what you do and for this opportunity to interact with you and to ask my question also. Okay, I have 3 questions to ask. Number 1, now. My question is hinged on what happened recently to Luna and the Terra ecosystem.
Okay.
So, but my real concern is about stable coins. So my first question is with what happened recently to the Terra ecosystem and how UST, which is Luna's stable coin, lost value and came below $1 per USD, of course, which would have been.
Yeah.
So what do you think this is going to affect? Do you think this is going to, or this will affect the way people look at stable coins? First of all, that's my question number 1. And
Okay.
then, based on this, question number 2, based on what happened and what you think, which stable coin or stable coins can you recommend to people as the best, the most trustworthy, or your go-to? Which is your go-to stable coin that you can recommend to anybody that wants to, use a stable coin as a means of storing value? That's of just storing money without looking for the profits that come with, you understand, and trading, having coins that can grow in value. That's number 2. Then number 3, besides the dollar pegged stable coin like the USDT BUSD, for instance, is there any other stable coin that any other coin rather that you can refer or recommend traders to, or not just traders, those that want to store their money in crypto but do not want their value to go down? You understand what I mean? It's better it remains stable than to go down. Like some people, for me, for instance, I store some of my value, some of my money, not even some. Practically, I store my money as USDT or BUSD, as the case may be, in stable coin.
Yeah.
But at times when there's a bull run, you're like, "Kai, I miss this bull run." So I know I've put on for BTC or I've put on for one kind of stable coin. But there's hardly any coin that doesn't go down. But from you are an expert this time around. I'm talking to you now as the expert. Of course, if it's not financial advice, you know when to say this is not financial advice. But what I'm saying now, the question is, besides the dollar peg
If
stable
it's
coin,
not
is there another
financial
coin you
advice,
can? Is there any other coin you can recommend? so that if
Okay.
I want to store my money in a relatively stable crypto, then somehow I won't miss out on a bull run. Yeah, and let me know if I'm asking for something utopian. Let me also know. Thank you very much.
Yeah, okay. Starting from your first question about UST, yeah, it is. It has actually. There's always one thing to trigger the bull market, and there's always something to trigger the bear market. Okay, so UST issues are actually it has affected the crypto market and actually triggered the bear market, right? It only triggered, but not like it's the only thing that's going to confirm it, because actually UST, Luna, Dokwon are actually working tirelessly to see how they can restore.
Crypto Smart, can you pardon me for question number 4? Please,
Okay.
so that you answer all of them together. Question number 4 is from an informed standpoint. From an informed standpoint, can you summarize what actually happened to Luna to the extent that it could affect the stable coin? Because that's my concern now. How can the stable coin lose value? What actually happened to Luna that affected the stable coin? Thank you very much.
I think I'm going to answer with your first question, which is actually affecting the market, right? It was able to affect the market basically because now what Luna did, the same thing Luna is doing by building a treasury that's backed by a token, is what Olympus DAO is doing, right? Olympus DAO is going to about $3,000 per coin, and currently it's trading at $20 per coin, right? It's the same thing Olympus DAO is doing, but Olympus DAO has different mechanism in their stabilizing their token, in the sense that Olympus DAO token can go above $1. But whenever it goes below $1, they have a buy bond mechanism to actually make sure it goes back above $1. Now, one of the things that actually affected Luna, from my own perspective, is the fact that they pegged a stable coin to a volatile coin. Pegging UST to a volatile coin like Bitcoin would actually not. It cannot allow it to be stable for long, especially when the market is very, very volatile. One of the things that actually affected them was that they were attacked, the market got volatile, and Bitcoin started going down, and the stability of that token actually gets affected. So pegging a stable coin to a volatile coin would definitely have a lot of issues with stability of your value of your stable coin. Like for Olympus DAO, they have treasury, but Olympus DAO doesn't have only Bitcoin. They have USDT, they have Bitcoin, they have basket of tokens. It's not like ETFs. They have a basket of tokens that actually are in their treasury that backs up their token, which is ohms. Now, for Luna, what they have only done was actually to back their stable coin, the Luna and stablecoin reserve, with only volatile coins. And when those volatile coins go down, it's really, really going to affect the stability of the USD. That's basically everything comes out of architecture, and some people say Ponzi. It's just the architecture that actually brings out the issue, and that's why it actually goes down that low. Stable coins you can actually advise. I would actually say you can buy. Now we have USDC. USDC is actually, I'll say, it's the bank coin. They can really, all the stable coins are they are not really decentralized. Those are the stable coins you have. If you move any fund on any stable coin right now, and probably you pull a fraud on stable coin, they can freeze your account. They can freeze your assets. This USDC also have that same mechanism. Most of these stable coins have, and it's really, really backed by the central bank. They're really backed by. They report to the Fed, I would say, USDC. So I would say that the total security of your fund, that you're totally secured. You might be regulated, but you're not totally secured. And one of the reasons why I selected USDC is that from research, I realized that USDC, that's USDT, they do monthly audits of their treasury. So by doing monthly audits, that's how they actually tend to enable their stability. If you look at what's happening right now, USDT is actually worth more than $1. Why USDT is trading below either $1 or 0.9 something, just functioning with that around that. But USDT is actually trading above $1 because they tend to do They do all these things. So that actually puts some trust in them. And the other one I would say is USDT. And basically, the reason for USDT is because USDT have been able to they've been able to withstand all the pressure that they've been getting from Fed and the likes. They actually currently just submitted some of their discount calls. Was it last week, right? So they actually have been fighting at the beginning. They've been rugged, I would say. So that's why I would say USDT could be the second one. USDT could be the second one. I have not really studied Binance. I've not really studied Binance. So I really can't say if Binance token that's BUSD stable enough for you to say you should invest. And there's another one, DAI. DAI is actually another stable coin you can even invest in. You can even put. And DAI is well regulated, is well, they do auditing and the like. So DAI is another stable coin you can also put back you can store your value in.
Okay, TAFA, which is stronger? Or rather, which is more dependable for you? Expert advice.
Okay, like I have been saying, TA is king. TA always works. TA tells you almost everything you need to know. But FA also tell you what you need to know. But FA tell you what you need to know in short term, not long term. But TA tells you what you need to do in long term. So I don't use just one. I use all of them. I use TA, I use FA, I use on-chain, I use astrology, I use sentiment. These are things I combine to trade.
Did I just say astrology, like astrology, real astrology, or astrology, astrology? Crypto?
Yeah, astrology, real astrology. Yeah.
This is getting weird, bro.
Yeah, right. It's actually that's impact on. So thanks for joining. Thanks for I believe you gained a lot of value from tonight's session. The video is going to be edited and made available for you. So please, when it's uploaded on YouTube, please endeavor to watch, like, and share. So by liking it, that's like telling the community that it's like kudos, keep up the good work, kind of thing. So thank you all for joining. Thanks for the feedback. Thanks for the questions, and I'll see you next week. Okay, don't forget to trade smartly. Have a lovely night.